A very, a very good evening to you all, friends. I'm Sanjeev Singhal, Central Council Member and Auditing and Assurance Standard Board and Chairman Sustainability Reporting Standard Board. I, along with my Vice Chairman CA Vishal Doshi ji, welcome you to the 61st program for this council year for the Auditing and Assurance Standard Board. This year, we have taken a target to the auditing standard learning to the doorstep of every member. And in every program, more than 2,500 plus members have been joining. So far, we have covered all the auditing standards. We have covered CARO and Schedule 3. And now we are doing topic-wise, account caption-wise programs. We have covered all elements of balance sheet. And today we'll be covering expenses on the P&L side. So with this, even the profit and loss account, all account captions will be covered. I'm extremely thankful to all the keynote speakers and all the speakers in the first 60 programs. And it's indeed a pleasure to welcome CA Irak Patwa, who is the speaker for the day. He's an associate partner with Pricewaterhouse LLP and has deep experience in audit and Ind AS and IFRS. We welcome you, Irak. And I have the great pleasure of welcoming my ex-council colleague, CA Srinivas Joshi ji, who himself was a vice chairman of the Auditing and Assurance Standard Board. And he's a partner in CVK and Associates in practice over last 40 years. And he's been an elected council member for 2 terms in the Central Council of ICI. He's been a chairman in 11-12. He's been the regional council member of WIRC for 3 terms. He's been the chairman of the FRRB, chairman of PDC, chairman of CLCGC, convener of Union Directorate, vice chairman of AASB, Audit Committee, Union Directorate, Center for Audit Quality, and he's been on the committee on NPO and cooperative sector of SAFA. He's been member of various groups of ICI. He's an independent director on audit committee and board of L&T Mutual Fund Trustee Company, independent director on board and chairman of audit committee of SBI Cards and Payments, director on XBRL India of ICI, director on ARF of ICI, and he's the president of Rotary Club of Mumbai Mulund East for the Rotary year 12-13. Thank you so much, Joshi ji, and your passion for the technical subjects is known to all of us. I welcome you to this program on the audit considerations for audit of expenses and would request for your keynote address. Thank you and over to you.
Yes, thank you Sanjeev ji and Vishal ji for inviting me, and also welcome speaker Irak Patwa from our own city, Mumbai. Now coming to this particular auditing standard, auditing is my passion, and AASB Auditing and Actuarial Standard Board was always my most favorite committee in the whole council. All the term I was member of that. And when this kind of initiative goes in the hands of somebody like Sanjeev Singhal ji, I am not surprised that this is 61st program from the time he has taken over in March, which is phenomenal. And this was what was discussed in council time and again, that auditing standard, those who are who want to take up this committee, they say that their programs are not well attended. The reason is we are not probably reaching people, and our financial reporting review board or quality review board tell us that we need a lot of auditing standard to be learned by the profession. And somebody like Sanjeev Singhal should have been there long time back, I think, to see that, the profession is really well equipped in auditing standards or matters relating to auditing. Once NFRA has come into picture, I mean, many people have become suddenly, it's an eye-opener, and then suddenly has become very actively trying to learn this subject. But a person like Sanjeev, who is in charge of this kind of committee, would definitely help institute to see to it that all of us who are in practice would learn this subject in the best possible manner and very quickly. It's a brush up, I know. When we start reading, we think that, yes, I have done it, I have seen this, but when it comes to something like expenses, everybody says, I know what is expenses. But let us, I will try to quickly summarize. Our speaker today is much more probably not by age, but experience in this subject in auditing very large companies, and he has done that work. But I'll just try to cover it for common chartered accountant or smaller chartered accountancy firms, what they would quickly look into expenses as a part when you look into P&L. Friends, first let us see what is audit. Everybody knows it is an examination of financial and non-financial records to give an opinion. What is an opinion? That it is a true and fair presentation of the financial statement. So when we start with this in any audit, when we come to auditing standards on which we are, this whole series has been going on, the auditing standard require us to do what? They require us to get sufficient appropriate audit evidence before the opinion is given. The word sufficient is for the quantity and appropriate word is for quality of the document, the quality of the evidence that I get. So sufficient in quantity, evidence should be sufficient. So my sampling has to be sufficient enough to get that evidence before I give opinion, and it should be appropriate evidence. That is, the qualitatively it should be the right kind of evidence. This is of course the basics. One more basics we should know before going to any P&L or balance sheet item is that what auditor satisfies himself about which kinds of assertions. The kinds of assertions about the accounting record regarding income, expense, or asset liability that the auditor will like to look into are four. One is occurrence, second is completeness, third is measurement, and fourth is presentation and disclosure. If you look at the expense side of the profit and loss account, then occurrence is obviously that you want to know that it is within the given time period. It may be quarter, it may be half year, it may be year, that expense has actually occurred, has taken place, and it is for the business. Second is the completeness, that there is no unrecorded expenditure in the books we will like to see. And of course, for that unrecorded expenses, probably the management information system, periodic system, which reports such expenses would help us to identify if some of the expenses have not gone through the account but are reported to management as expenses. Maybe they are made by our related concerns, and maybe that has not been considered in our books as yet. I'm talking of mid-size or small firms or small companies which do the work of accounting. Now, for measurement part of the expenses, the period allocation or matching principle on basis of time elapsed, we are already aware. And presentation and disclosure, mainly for presentation and disclosure, we depend on several legal provision or legal aspect of the act under which we are auditing. Now, for example, if we are talking of, say, Companies Act, and we are talking of related party expenditure on paid to, say, related parties, then what are the things we will see in, for an example, that in related party, I'll look at first it is whether it is legally tenable to pay such person, whether I can pay that person. For example, some of the cases it is not allowed, or something like document, whether there is a documentation with the related party before the expenditure was made, whether there was an authorization for such expenses, whether it was at arm's length, whether that expenditure was in ordinary course of business. So many things I look only for that one item of expenses with a related party. Probably legal aspects will come into play in addition to accounting aspects of the expenses that I'm looking at. Now, expenses will also require auditor to verify who has initiated this expense and who has authorized. So initiation and authorization procedures and other internal control procedures would be very important when you are going through the expenses as a head of for auditing. Now, there are several areas may be linked in the profit and loss account. For example, if we are looking at revenues earned and sales made, several expenses may be related to that figure. And therefore, logically, when I am certifying something or giving opinion, it's not enough to do vouching. I will have to probably go into various things relating to revenue. For example, if the subsidies, rebate, duty drawback, commission payable, commission clawback, or duties, taxes, if they will be related to the revenue, and therefore I would have to link them. Now, now there many times we find the record to be very voluminous, and we talk of sampling. When we talk of sampling, it's obviously auditor's judgment as to how much sample I should select. But that depends, of course, on the individual expenses as compared to the total expenses that would be under a particular head to reduce the risk of material misstatement. Friends, it can never be zero. We cannot reduce the risk to zero under any side, whether it's a fraud risk or error risk. It cannot be reduced to zero, but we try to do sampling in a way that we see that everything is almost all areas are covered well. Now, another thing I like to say about expense is use of technology or softwares. Whenever, say, for example, if I have a software for salary computation measurement, then or some such softwares are used even for fixed asset software. There are many softwares which I use. Now I need a technical knowledge of computer handling skills before I really go into it. If suppose SAP is a software used in the company, then I must know what is SAP, Oracle or something before I really audit of any expenses. Coming to, there are many extraordinary expenses which are not normally made in almost all companies. Suppose R&D expense or processing charges for work given outside. These are not normal expense. It needs different procedures. Similarly, income tax payment, income tax provision also needs, like expense provision of income tax, etc., needs special knowledge from your side. One more thing I like to say is prior period expenses. Friends, we always, in a smaller organization, we have found that prior period expense becomes a head. Prior period expense is not a head of expense. Expense should go either by the nature or function. For example, if the salary for last year or conveyance or a traveling for last year is paid in the current year, it is a prior period expense, but it will go under conveyance or salary. And a notes to account will say these expenses of the profit and loss accounts include the prior period expenses of, these are prior period expenses. It will, in the salary is a salary, in my opinion, and it is not, the prior period expense cannot be a head of expense. Now, cut-off transactions, friends, in expenses side are extremely important. Cut-off transactions under matching principles, we need to know what it is. One more aspect of, obviously, the speaker will take up is the contingent liability versus actual liability. When there are demands raised or cases filed against the organization, the auditor will decide whether it is a contingent liability or actual liability. And either if it is a contingent liability, there will be only disclosure. But if it is an actual liability, he must insist on the provision or give a report under SA 705, 706, so that he knows that how to modify his report for non-provision of actual liability. Another aspect is personal expense. Many times in smaller organizations, we find personal expenses charged to revenue. This is one aspect, whether there is a tax audit or not, every auditor has to be very, very cautious on these expenses and personal nature. Friends, another major thing which we don't do in the normal audits is ratios. Most of the large firms go for ratios to start with, to decide which of the areas they should go. Or they go to the comparison of current year figures with previous year figure to find out which of the expense areas they should go in depth. This is where we should start the audit, but hardly we try to complete the audit and then go for expenses or ratios comparison, or comparison of expense or ratios. Then we will hardly benefit from that final result of it. One more aspect I'll request the speaker to take up is fraud possibility. Friends, inflation of expenses, that is like ghost employees or false travel bill, is common in many organizations. And this type of fraud of inflation of expenses or journal entries, you can do very rigorous audit. 3 or 4 journal entries at the end would change whole result from profit to loss or loss to profit. Whenever JVs are passed, we must look at initiation of that JV, authorization of that JV, and documents which are supporting that JV. Because the false expense booking or false creditors being created, fake creditors being created to journal entries, either to, or it can be on revenue side also, some of the JVs, to change the result. This area of, fraud possibility of either inflation of expense or passing through JVs, all the audit gets washed out just in 3 or 4 JVs, which are either not checked or not properly supported, and the whole result, untrue and fair view, can be vitiated. The last thing I like to talk is about documentation. You must have already heard the auditing standard on documentation, but the work carried out, I personally feel I must give the, even smaller firms should think of documentation templates to be given to the staff to see what kind of documentation they should maintain, to see that expense vouching, if they do, or expense checking that they do and certify finally is properly supported by documentation, if at all they have to prove it in any discipline. With this, I think you have a very, very able speaker on one side and able chairman on the other side waiting for me to complete this. And I think I will with this, I will stop here and hand it over back to the chairman.
Thank you very much, Niva Joshi ji. You've been one council member I always looked upon, whether it is the auditing standard matter or the CLCGC or the audit committee of ICN. I'm deeply honored by your august presence for this webinar. Thank you
Thank you.
so much, sir. And
Thank you.
with this, now I invite the speaker for the day, CA Hirak Patwaj.
Yes. So thank you, Sanjeev Singhal ji, and thank you, Srinivasan ji, for setting up the context for this presentation. With this, let me put up the slide deck for today. Is my screen visible?
Yes, it is visible.
Okay. Yeah. So what we will be capturing today is we'll start with the introduction on what is an audit, what could be the probable approach for audit of expenses. We'll take you through some of the key expenditure line item like purchase, cost of material consumed, employee benefits expenses. We'll take up some of the aspects on depreciation and amortization. What are the key consideration to test those? We'll also take up some of the other expenses. Last but not the least, we'll also take up how we can correlate the expenses with other financial statements line item. Auditing estimates that also plays very important role in auditing expenses, and take up other consideration and couple of case studies. So with the introduction, the company normally prepare those financial statements as per the applicable financial reporting framework. Most of the companies have to follow two types of financial statement. One would be the accounting standards, which are considered as old Indian GAAP standards. Second would be Ind AS. So a lot of companies have already adopted Ind AS. So these are two frameworks available for the purpose of the preparation and presentation of the financial statements by the company. Also, audit of the financial statement comprise examination of the entity's financial statement as well as disclosures by an independent auditor. And the outcome is our auditor's report, which says the truth and fairness of the presentation of the financial statement as well as related disclosures. What could be the auditor's responsibility? Let's start with that. So to form an audit opinion, there would be a lot of responsibilities put on us by various stakeholders as well as shareholders. So we are fully accountable for the level of quality of the service that we provide to our clients. And it is a mutual expectation. So at the planning stage itself, at the beginning of our audit, we need to have a conversation with the management as well as board and audit committee to set up the expectations. And at the conclusion, we need to discuss whether everyone has performed based on those expectations or not. We also need to provide independent views on the matters arising from our audit work. As an auditor, it's our responsibility to place an experienced audit team member who would have a reasonable knowledge of client's business, what are the issues that client may face, and appropriately draft our audit procedure in such a manner that audit risk would be very minimal. We also need to perform audit with no surprises. For this, we need to start discussing well in advance and at respective stage with the management, audit committee, as well as board members. We also need to consider or understand technical issues that were kind of observed by the client during course of the year, and not to wait till the flag end of the year. We also support audit committee and board in achieving their objective for ensuring business operates within a robust control environment by issuing management letter. So management letter captures the outcome of our audit procedure in the form of issues that we have noted at the end of our audit procedures. So like what we said, on auditors has some responsibility. Auditing standard also defined management's responsibilities. So SA 210 determined what would be the management responsibility. First and foremost, financial statements. So preparation of the financial statement in accordance with the respective framework, be it Ind AS, Indian GAAP, is the primary responsibility of the management of the company. Management also need to make sure that they place sufficient internal controls to enable the preparation of the financial statement would be free from material misstatements by error or by fraud. Management also needs to assist auditors in providing access. So access may be in the different form, access to all informations, data that would be required for the purpose of preparation of the financial statements and documents. Management has to provide an access to various people within the organization so that we can go and perform inquiries or discussions for the purpose of our audit, and the access would be an unrestricted access. If there are any issues in relation to access to various data and information, it is our, as an auditor, it is our responsibility to draw that attention to those charged with governance as well as audit committee. So let's start with the fundamental fact on the preparation and presentation of the financial statement. So while preparing the financial statements, management of the company needs to make a specific assertions, be it cutoff, completeness, existence, valuation, accuracy, obligation, presentation, and disclosures. These assertions are required to be made by the management for assets, liabilities, income, expenses, and related disclosures. So that is what is called a component of the financial statement. And for each and every component, management has to make this implicit and explicit claims. Now let's look into what this assertions all about before we jump directly to the expenditure part. So audit assertion as per SA 315, so para A111, which describe what are the audit assertions. So assertions about class of transaction, events, related disclosures are as follows. It starts with occurrence. So let's say for an example, whether the transaction has occurred or not, whether the company has made the payment of rent or not, that is called an occurrence of the transaction. Second is a completeness. So for an example, if we'll take a rent, whether the company has made for a rent payment for entire 12 months period or not. If the transaction is recorded only for 11 months, then there will be an issue on completeness of the transaction. Next is on accuracy of the transaction. So whether the transaction recorded is with proper amount, which is the company's obligation to make the payment. So for under the rent as an example, whether the rent expense recorded into the books are accurately recorded or not, that is considered as an accuracy of the transaction. Next is on cutoffs. So whether the transactions are recorded in the proper period or not, that will give us a comfort on cutoff assertions as per the auditing standard. Last but not the least is classification and presentation. Classification so as to say whether the rent expenses are debited to proper rent expenses or have they been kind of debited to any other heads, right, repair and maintenance. So that is considered as a classification of the transaction. Presentation means presentation in requirement of the applicable reporting framework. So presentation both under division 1 and division 2 would be a little bit different in terms of an expenditure. So these are the audit assertions which are specifically related to profit and loss items. Before we jump into next, let's look into specific assertions which are related to balance sheet, because these are also to some extent linked to the expenses. First one is existence. So let's say, for example, receivables, whether the receivables existed as a balance sheet date or not, that is considered as an existence assertion. Next is on right and obligation. So whether the entity has a right to receive the amount from debtors, that is considered as a right assertion for an assets and obligation for liabilities. Other four are similar in line with what we have looked into in the statement of profit and loss, like completeness of the transaction, accuracy and valuation allocation, classification, as well as presentations. So in first part, we have looked into the assertions which are impacting statement of profit and loss item. In this part, we have looked into the assertions which are directly impacting on the balance sheet items. So this is an illustrative disclosure of Division 1 non-Ind AS Schedule 3 financial statements. which typically starts from revenue from operations and ends on the EPS, basic as well as diluted. If we look into the division one, it broadly describes expenses between cost of material consumed, purchase of stock in trade, changes in inventory, employee benefits, depreciation, other expenses. These are broad heads of expenses, which as per division one is broadly bifurcated. Where we look into the division two. So division two also describe expenses in more or less similar manner. So there are no changes per se between division one, which is an old Indian GAAP financial statement, whereas the division two, which is a Ind AS financial statements. So not a big change between expenses of division one and expenses disclosure of division two. One change is there in the disclosure of other expenses, whereas division one categorically describe what could be the component of other expenses specifically to be disclosed, like rent, fuel, repairs and maintenance. Whereas division two under Ind AS, it is as per the management's judgment what kind of expenditure required to be disclosed, and it also depends on the materiality of the transactions. Next, what we look into nature and function wise classifications. So in India, we normally follow nature wise expenditure disclosures, which starts from revenue, other income, cost of material, changes in inventory, employee benefits, finance cost, depreciation, other operating expenses, and end with the profit and loss before taxes. Whereas a lot of companies which are outside India, global companies, they do follow function wise classification also. So the difference is where the, let's say for an example, company has incurred in expenses for the purpose of marketing their product. In Indian GAAP as well as under Ind AS, that expenditure would normally classify as an other operating expenses, whereas in function wise classification, it is typically classified as a marketing expenses for distribution cost and categorized as a distribution cost. So there is a slight difference between nature wise classification as well as function wise classification for any expenses line item. Now we'll move to audit approach for expenses. So as an auditor, we need to design our audit approach in such a manner that will satisfy ourselves in terms of transaction and disclosures in the financial statements. So for that, the audit standards guides us to perform risk-based audit strategy, wherein we need to understand what controls placed by the management, go and verify those controls. Normally, we do obtain audit evidences from various sources, which starts with meeting with the senior management, wherein we will get a lot of insights on what are the changes happened in the current year as compared to the previous year. We'll also understand the business of the company. What are the risks involved? If let's say there are transactions with the companies outside India, whether we have evaluated cross-border transactions from an exchange rate perspective, whether the exchange rate changes is considered as a significant risk or not. Next is on obtaining understanding of the processes. So as a part of our audit process, we'll perform an understanding of the each business processes. And what we'll do is that map the relevant controls within those processes with the risk identified during course of our audit. If required, we need to update that before we conclude our audit opinion, and involves third-party expert wherever there is a need, because auditor is not an expert for all aspects which are going into the financial statements. Also remember that we are not supposed to verify all controls placed by the management. From a control matrices, we need to identify what are relevant controls which are placed for a particular business process and validate only those controls. Once we do a proper understanding of controls and identify key controls, we'll perform testing of those business processes and testing of those controls. And after testing completes, we'll also need to perform some level of substantive audit procedures. Substantive audit procedures rigor is dependent upon effectiveness of the controls placed and relied upon by the management. Also, based on the risk identified in the risk assessment process, our rigor of test of detail would be determined. So ultimately, we start with understanding of the business, do an evaluation of the various business processes, controls placed by the management, perform testing, and provide our conclusion or outcome of our audit procedures. This is what a normal audit approach is, which also required or also applicable for auditing expenditure items. So let's start with understanding understanding the design and implementation of controls. So there are four components which kind of determine overall control activities. Start with control environment, risk assessment, monitoring of controls, and information and communication. These are the four buckets under which we need to perform our overall assessment on how the entity has established various components for the purpose of financial statements. And we need to provide a proper understanding of what is the control environment, what are the risk assessment, or what are the risk policies or framework that company has implemented, whether the management has proper mechanism for monitoring of controls, whether they have internal audit department who goes and verify those controls placed by management or not, what could be the information communication mechanism that the company has set up. It also includes understanding of the IT environment. So specifically under the risk assessment framework, we need to determine what could be the IT system, whether it's an SAP, Oracle, Tally, whatsoever. Our robust understanding of the control or robust understanding of the ERP, which is implemented by the management, we need to perform a detailed understanding. Once we perform all this understanding, we need to determine or we need to perform design effectiveness. And to do a design effectiveness, we need to perform walkthroughs. So as to say what could be the walkthrough. So let's give you an example. In a purchase payable process, it typically starts from ordering of the goods and ends with the payment to respective vendors. This is a normal purchase payable process. So to commence or to directly jumping into testing of invoices, before that we need to perform whether the design of control framework or design of the purchase payable process is proper or not. And the first step is assess the design effectiveness. Once we'll assess the design effectiveness, we'll identify what are the controls. Let's say in purchase payable process, control is purchase order is approved by purchase manager. That can be considered as a key control. So in that scenario, once we'll do a design assessment, we need to identify what are the key controls placed in by the management. Once we'll identify key controls placed in, we will perform an kind of take one example and perform a walkthrough as per the requirement of SA 315. And once we are fine with the design and design effectiveness, we'll go and design our audit procedures, be it a control based or be it a substantive test of details. To determine whether the control is proper or not, there are a lot of inherent risk factors which are embedded in any control, which starts from complexity of process or complexity of that particular business unit. What could be the subjectivity of transaction, whether there are any change happen as compared to the previous period or not, what are the uncertainty involved, whether the transaction is susceptible to management bias, is there any risk of fraud involved. Once we'll determine what are inherent risk factor for a particular business process, then we need to perform likelihood and magnitude assessment. So likelihood and magnitude assessment is required to be performed for all key controls that has been identified at the time of design assessment. And when we are fine with the likelihood and magnitude, so then we'll be able to determine whether we'll go ahead and rely on those controls or not. To evaluate design, there are some factors that are required to be examined. So it starts with alignment of controls with various business and audit risk. We also need to determine what are the information processing objective, like whether the transaction is complete or not, what are the key risks involved in those particular transactions, what is the level of desegregation, so whether the transaction is performed by a corporate office or it is decided at a various division level, if it is a multi-location organization. In case of a smaller organization, whether all decisions are concentrated and taken by a core business group or a senior management. What could be the frequency of control, so as to say, for example, bank reconciliation, which is one control, whether that control is performed once in a month or once in a quarter or 15 days, that is considered as a frequency of control. Also, knowledge and experience of the people, so that is also one of the key assessment that we have to perform at the time of design effectiveness of control. uh, Segregation of duties, whether there are sufficient people within the organization to prepare a transaction and to validate the transaction. Next is on reliability of the information. So whether the information processed by the management, are we as an auditor able to rely on those information or not? Period covered, so whether the management has performed their testing or designed their control so as to make sure that the control is operated throughout the year or not. Next is on consistency and timeline of control, so whether the control is operated consistently throughout the relevant period, and what could be the probable timeline, whether it's capture entire our audit period or not. So all these factors will help us in evaluating our design assessment from a controls perspective. So once we'll evaluate the design of controls, there would be a nature, like nature, timing, and extent of audit procedures. So let's look at these three parameters one by one. Nature of testing. So nature of testing is broadly categorized into these four procedures, which starts with inquiry. So normally we go and put up an inquiry with the client whether this control exists or not, ask relevant questions to the client. We also need to apply professional skepticism, so as to say, ask appropriate questions to appropriate person. That is an inquiry. However, inquiry alone is not considered as a sufficient procedure. It should be accommodated by some other procedures like observation, inspection, or reperformance. So let's say, what is the observation? So if someone is making the goods or taking the goods out of the factory premises, and at that point there is a noting happen at the gate register entries are getting updated, and if we go and observe that entire process, that is considered as an observation of the transaction. And so as to say, we will look into what how the person is kind of how we are able to observe those transactions. Next is on inspection. Inspection is more or less examining evidences which we perform in normal course of our audit, wherein we'll take up some of the invoices based on our sampling guide, based on our our auditing standards requirement. Will identify what are the samples has to be performed, and we'll kind of pull out those and perform testing or verifying those invoices. Last but not the least is reperformance. So to give you an example, one of the best example for reperformance is, let's say management has performed computation of depreciation, which may be generated by an accounting system, or someone externally has performed computation for depreciation. So if we wanted to say reperformance is a correct procedure, so we as an auditor need to pull those data, do a recomputation of the same, which is considered as reperformance of audit procedures. So as to say, whatever management has performed, we are reperforming. And inspection and reperformance will give us most appropriate audit comfort as compared to inquiry and observations. Extent of audit testing. So what could be the extent of transaction? That is first dependent upon the nature and materiality of misstatement. Let's say at the beginning of the audit, we'll determine that and other expenses, royalty expense is a critical transaction which we need to go and validate. So materiality of that particular transaction will play very important role. What could be the inherent risk associated with that particular account? Are there any assertions involved in that particular transaction or not? Whether there have been any change in the volume or nature of transaction. Let's say, for example, last year royalty expense is 100 million and current year it has suddenly changed to only 10 million. So as whereas the revenue model of the company has not changed. So in those cases, if there are significant changes in the volume or nature of transaction, that would kind of decide the extent of testing or to what extent we need to go in deep for any transaction, whether any account has history of errors or not. So in some cases, if we observe last year, we have found some errors in employee benefits expenses. So whether for the current year, we already have that knowledge that last year error is noted in this particular area. So that will help us in determine extent of testing for an employee benefit for the current year. Next is on effectiveness of entity level controls. So entity level controls, so as to say, is that controls placed in by the organization at an top level. So whether there is proper segregation of duties, board is reviewing particular key transactions, those are key entity level controls, whether the accounting system is proper or not. Those are entity level controls. The effectiveness of those entity level controls will help us in determine extent of testing. Also, nature and frequency of controls plays important role in determining extent of testing. For example, a particular control will operate only 4 times in a year, so as to say it's a quarterly control. So that in that cases, we need to determine extent of testing maybe 1 or 2. The level of manual oversight. So in an automated control environment where a lot of transaction happened by an accounting system, maybe SAP, Oracle, what could be the manual oversight? So what are kind of manual judgments that the company will take while posting any transactions? Competence of the person who kind of plays very important role, whether key personnel are involved, let's say journal entries posted by CFO or CEO of the company, whether are they supposed to post those journal entries in an expense ledger or not. That plays very important role. Also, our past audit experience plays very important role in determining extent of testing of any transactions. Timing of testing, so as to say at what point we need to perform what level of procedures. Lot of clients we perform testing in the month of December for March year end clients. Some clients we perform testing after the year end as well. So the extent and timing of that particular testing will play very important role. To assess that, we need to see whether the management is monitoring controls throughout the audit period or not. Is the management is in a position to identify if there are any exceptions noted before the year end and correct those exceptions before year end completes. That would play a very important role in timing of our testing. Also, high level business performance reviews. So whether the senior management is performing or preparing MIS, reviewing MIS on a monthly basis or quarterly basis, that will also determine or help us in deciding timing of our audit. Frequency of report, let's say system is generating some reports only on a quarterly basis, which would be ineffective. That would help us in determining whether we should consider that as a quarterly control performed by the management and determine our audit procedures. Whether it's an automated control or manual control, that would help us in deciding timing of testing and whether we need to test. Let's say, for example, we have performed control testing in the month of December and validated transactions from April to December. We also need to decide what could go wrong in the remaining period. And to decide what could go wrong in the remaining period, a lot of factors like competency of the management, what could be the frequency of transaction, automated control environment, is there any change happen in particular reports or an audit accounting system, plays very important role in deciding testing at or timing of our testing. Now what we'll be doing is that we'll kind of categorizing each and every expenditure and identify what is the planned procedures in an ideal scenario. Also remember, these are illustrative procedures. In each client, depending upon the understanding of the business, depending upon the risk that the entity has noted, the procedure could vary. So as I discussed earlier, for purchase and consumption of material, it's a business process which starts from ordering of any transaction and concludes on payments made to particular vendor. So this is an end-to-end process. What are the key steps for that process? First one is understanding the process, wherein we need to go and do an understanding of the process of procure to pay, and then understand whether in the entire process whether the entries are posted automatically, whether there are any manual intervention involved for journal entries. And once we kind of do a proper understanding, we need to perform risk or identify the risk of what could go wrong. So typically for a purchase process, we need to kind of identify or what could be the probable risk is. Maybe all purchases or consumption are not recorded properly, which kind of questions the completeness as an assertion. Whether the transaction recorded with some incorrect amount, ideally purchase should have been recorded based on the uh, quantity which is received and not based on the quantity which is invoiced. So that is considered as an incorrect amount of transaction, which kind of gives a question on accuracy of the transaction. That there are any fictitious purchases are made by the management or not. There are some cutoff issues in terms of some transactions which are not recorded, which are required to be recorded in the particular period, or some transactions which are presented incomplete in the form of disclosures. So these are typically risk which is linked to procure to pay or a purchase as a business process. Once we'll identify what could go wrong, so as to say identify the risk of material misstatement, we need to kind of identify what are the controls placed in by the management to mitigate those risks. So as to say, there are some examples which I have plotted down, which starts with the vendor master. So which is the first step from the initiation of transaction. Whether at the time of creation of the vendor, company is asking for a relevant documentation from the vendor, be it their PAN number, be it their GST registration, MSME certification, their cancel check, bank account details. Lot of things would come up at the time of creation. That vendor master control play a very important role. Also, any changes happen to vendor master. So let's say for an example, vendor master created 3 years back, but during the year, if there are bank account detail got changed for that particular vendor master, so that play very important role, and that draw as an auditor our attention whether we need to validate those transactions or verify whether those changes are authorized, changes are appropriate or not. Next, which is very important, is three-way match. For any purchase transaction, three-way match plays very important role, wherein we as an auditor need to determine what is the rate which is approved under the purchase order and what is the rate given in the invoices. What is the quantity which is received as per goods received note GRN, and what is the quantity as per invoices. So this is called a three-way match of purchase order, GRN, and invoice. If these three items are matches, then it will give us a comfort on the completeness as well as accuracy of the purchase transactions. Next is on credit or debit note approval, whether there are any changes happen subsequently in any particular invoices. Let's say, for example, during the particular month, the invoices come at an X rate, and in the agreement that is entered into with the party, there are some clauses for changes in that rate at a future date, depending upon some certain event, depending upon, let's say, for example, change in LME prices. So whether those price differences are properly adjusted or not, that is also a key control for the purchase processes. Whether the material consumption is properly recorded based on issue notes or not, that is considered as a proper key control for a purchase transaction or consumption transaction. Next is on payment authorization. So payment authorization can be linked not only with the purchase process, but any payment made for any expenditure part, be it a purchase, other expenses, payroll. So that for that the payment authorization comes up. When we perform an understanding of the business, we need to determine whether the payment authorization are different with the different class of expenditure, or all class will have a same payment authorization. That understanding will help us in identifying proper design of our audit procedures. Next is on posting of journal entries. So at the end of the year or at the end of the period, whether any journal entries required for, let's say, for example, any rate differences, whether they need to post any journal entries or not. And on those journal entries, whether the segregation of duties has been carried out by the management or not. Last but not the least is cutoff procedure. So whether all purchase required to be recorded in particular period, whether those are recorded or not, that is a cutoff for a particular transaction. So once we'll determine the risk, once we link the relevant controls and do a kind of linkage of control with the risk, we need to decide what could be our audit strategy, whether we want to go and test those controls, rely on the controls placed in by the management, or we don't want to rely on the controls and directly perform substantive audit procedures so as to say verifying various invoices which is received during there, as well as purchase order and GRN. That would kind of help us in determining the appropriate procedure. Also remember, friends, all the time directly doing substantive procedures will not give us sufficient appropriate comfort on audit processes. A lot of clients in India, internal financial control framework is already applicable. So it plays very important role for us as an auditor to design a control based audit strategy. So as to say, we need to, it will help us in giving a comfort on internal financial controls as well, or issuing our IFCFR opinion. Once we'll determine or design our audit strategy, we have to do a normal testing of any particular transaction, and that will help us in concluding whether whatever procedure that we have performed, or do we need to perform something else extra, is there any transaction occurred outside the normal course of business, and then we'll conclude whether the risk of material misstatement is at low level or not. So this is a broad process for purchase or cost of material. There are some key, some of the key aspects which we will examine while we'll do a test of details for the purchase, or so as to say substantive test of details, like segregation of duties exist or not, whether at the time of purchases quotations are asked from various parties or not, purchase department has authority to determine purchase prices, or there are some controls placed by management committee, which is a separate committee to determine prices for key purchase of the products. Are there any issues noted in any of the business processes, whether the goods received are properly acknowledged by the gatekeeper, appropriate stamping happening or not, is there any quality inspection processes there or not, because the goods once entered, if there are they passes through a proper quality check or not, who approves the vendor invoices, whether the three-way match is process is placed by the management is proper or not, and how the purchases are being recorded into system, whether those are kind of directly looked or booked under the inventory head first, and then based on the consumption it is taken to P&L, or those are taken to directly to a purchase in a normal ERP. So understanding of their management's ERP system also plays very important role. Next is on input tax. So various tax credits that the entity is availing, whether those are proper or not, and whether those are reflected properly in various portals. In case of a related party transaction, yes, so that also plays very important role, where the entities is purchasing specifically from related party, whether the transactions are at arm's length or not, and proper level of approvals have been obtained by the management before entering into transactions, whether there are any unusual journal entries into purchase transaction or not. So these are just broadly describing on what questions or what sort of points that we can examine while we determine the purchase or cost of material audit strategy. Next is on selection of samples. So normally we determine materiality based on SA 320, and based on that we'll determine, let's say for an example, there are purchases happening once in a month for large products. There you will get 12 samples, whether we need to verify all 12 samples or whether we need to kind of determine top 100 items and validate those items. In determination, we also need to determine what could be the sampling unit, whether we want to consider invoice as a unit or whether we need to consider GRN as an sampling unit. It also depends on how entity records the transaction. So again, an understanding of the business process and understanding of IT or accounting system plays very important role even to determine sampling units. Also, how we'll record the completeness or appropriateness of the population. So whether we'll have a complete set of data which is generated from any report, have we done enough to test reliability of those reports or not, and analyzing the results of those tests. Ultimately, while we kind of do key documents examined during the purchases, purchase order, invoices, gate entry, GRN, sometimes we'll opt in and go for vendor confirmations as well, whether in invoice wise confirmation or a balance wise confirmation. So that would again help us in getting sufficient appropriate comfort on purchases and financial statement line items. Also, we can, apart from kind of performing controls testing as well as test of details, we can perform some of the substantive analytical procedures like trend analysis. So let's say for an example, if the purchase is made throughout the 12 months, we can put that up in a pie chart and understand if there are significant up and down in the purchases made by the management and ask relevant questions. Next is on variation analysis. So a particular product is purchased at certain rate, and if there are certain fluctuations in particular month in the purchase prices, that analysis also can be performed, and so that we can ask relevant questions to the management and obtain comfort on the purchases and FSLI. Next, what we will be looking is employee benefits expenses. So employee benefits, very important area. Lot of time we kind of putting up less emphasis on employee benefit expenses, but this is a significant line item for various companies. Like for IT companies, employee benefits plays very important role. Like for KPO, BPO, employee benefits is a significant line item. They are considered employee as an asset. So whatever benefits that they are giving, whether those are properly recorded for into the books, that plays very important role. So again, a brief on testing approach. It again starts with understanding of the payroll process. So as to say whether the employee masters, it starts with payroll processing, change to employee master, when the employee separates, whether the full and final settlement is done properly or not. So entire end-to-end business process understanding we have to perform. What could be the risk? So a lot of time the client comes up and say, if I don't pay to an employee, they would come back. So technically there is no risk in employee benefits as an FSLI. But for us as an auditor, yes, there is a risk. Let's say, for example, salaries is being paid not only to employees, but their family members, their wives, or their relatives. That is considered as a risk from an audit perspective, whether there are any fictitious employees exist in the organization or not. We also need to perform the head count, whether that reconciliation of the head count with what payments that the entity is making. So that kind of reconciliation is also considered as a risk. Uh, if there is payment made which is not in line with the appointment letter of the employee, so that is also a risk from an payroll as an FSLI. What are the controls? So from an payroll as a process, major control plays is employee master creation as well as changes. So when the employee master created, is the proper process taken by the entity, by the organization, in terms of calling out various details from the new joinee, their PAN card, Aadhaar card, their employment, their past employment records, lot of stuff that there would be a checklist when an employee joins in any organization. So employee master creation would be based on various documents that the employee submit at the time of joining. Changes to employee master also plays very important role, like significant event occurred, then there would be a change in employee master, like promotions happen, like for example, any change happen in the designation of the employees, whether they are deputed to some different organization or another related entity. So that again there would be a change in employee master. Again, control on full and final settlement. So when employee separates from an organization, whether the company has done full and final settlement properly or not. What is the payment process mechanism? So are the payments made in the specific bank account which is getting opened by the company, or employee will have a right to claim these are my bank accounts and you place the salary into that bank account? So understanding of the payment process for employees plays very important role. Reconciliation of the head count as well as provident fund, other contributions that the entity is making. Reconciliation of what is the number of count or employees which are eligible for provident fund and what is eligible for normal payroll. So that reconciliation also plays very important role while testing or designing our testing approach for employee benefits. Next is on actual valuation. So this is also one of the key aspect that we as an auditor need to look into. When there are benefits in the form of short-term benefits, long-term benefits, gratuity, leave encashment, uh, complex ESOPs, employee stock option plans. Uh, Under those scenarios, we need to see whether the experts are required to be involved, whether by auditor, whether by the management. And considering the involvement of experts, we need to kind of finalize what could go wrong in the payroll as an FSLI. And again, similar aspects on understanding process, identifying risk, identifying controls. We need to design what is our audit strategy for testing of payroll as an expenditure line item, and perform similar kind of substantive test of details on the balance population that we'll identify. Some of the testing approach. So this is again an illustrative testing approach. It depends on your client, considering environment or the situation in which client operates. We need to start typically with employee master, background verification is proper or not, changes made on account of increment, resignation, etc. Whether the payment is approved by a designated person, the payment is as per appointment letter or increment letter. Sometimes we also see that salary of the senior management, which is typically management is also in a hesitant to share the data. So again, we need to go back to the management responsibilities and say that we as an auditor need to have an access to all data and information. So salary of the senior management also required to be seen based on our audit plan and testing strategy. One thing I would like to emphasize here is that a lot of organizations have payroll function which is outsourced by an external agencies. So in those scenarios, we need to do an testing of input output data. Let's say, for example, what the data that entity gives to that third party agency and what the output that third party agency give to the company. So whether we can rely on those input output as a control or so as to say other substantive audit procedures. Sometimes what will happen is that we need to go and test the third party outsource company. Technically we will not, as an auditor, will not have an access to. So they will kind of get it audited themselves and provide the type 1 type 2 report under SSAE or service organization perspective, and we can think whether we can rely on that report which is furnished by an outsource agency. Also full and final bonus payments also plays very important role, because it has to some extent linked to a provision as an kind of financial statement line items, whether the actual valuation carried out properly or not. Also, when the management carries out actual valuation, we just cannot blindly rely on whatever data furnished by the management to the actuary, or whatever the assumptions used by the actuary. So we need to go and perform testing on those assumptions, whether those assumptions taken by the management are reliable, are in line with the industry standards or past records of the company. A lot of assumptions like increment rate, discount rate, withdrawal rate, or attrition, as to say attrition rate, and we need to conclude whether those are reasonable or not. We just cannot blindly rely on key assumptions which are used by the actuary. Again, on selecting samples, so we'll again need to go back to SA 320 and understand what is the materiality for a particular transaction. Also sampling unit, so whether one employee is a sampling unit, 1 month is a sampling unit, that is something that we need to examine based on the how the management processes the transaction, how what is the completeness and appropriateness of the population. Also salary reconciliation means what is debited to the statement of profit and loss vis-a-vis what is there in the salary register, what could be the probable differences, and document properly whether those differences are proper or not, or whether those comprises of a lot of full and final settlement of the employees, which plays normally salary reconciliation items, and understand whether there are any misstatements identified during our audit procedures. So again, in terms of documents, it would be an increment letter, appointment letter, pay slips of the employees, bank statements, statutory dues challan. So that also gives us a comfort on total number of employees. So like PF, when they file the PF, they would know what are the number of employees they are furnishing to statutory authorities, whether what is there into their financial statement, what are the number of employees are included in the actual valuation report vis-a-vis what is there for with the salaries process. So a lot of things would interplay between the salary as in financial statement line items versus a lot of other data and information. Also, so as to say, substantive analytical procedures like trend analysis. So we can do a month-on-month salary analysis as well. So as to identify, let's say, salary processed for the month of April vis-a-vis salary processed in the month of June. What are the differences? Whether those differences are due to addition, deletion of employees, or whether those are due to increments given to employee pool of employees. What could be the reason? And we need to document or justify those reasons based on discussion and based on the verification of the documents. Next is on depreciation and amortization. Yes. So depreciation and amortization is also one of the key expenditure for a large conglomerate where they have a big item sitting in their property, plant and equipment, right of use assets, or even other intangible assets. To test depreciation amortization, again we need to do an understanding of the business process for property, plant, equipment as a whole. So it starts with again a procurement or a purchase order for an asset and ends with the journal entry for depreciation or amortization as a flow of transaction. Again, in depreciation, what could be the risk? So risk would be maybe the depreciation is planned to be automated in ERP system, but the logic which is set in ERP system may not be correct. So in those cases, depreciation output would not come properly. In some cases, the depreciation computation is manual, so it may be possible that the formula which is used for the purpose of computing depreciation that are not correct. So that is considered as a risk for depreciation as an financial statement line item. And from a control perspective, two sets again, where we are having reliance on automated system depreciation computed by ERP itself. We need to see whether the calculation is accurate by the ERP system or not. So a lot of time we kind of blindly rely on ERP system where the computation is made by the system. However, in those cases, even we need to go and check whether the logic fit into ERP system for the purpose of depreciation computation is proper or not. Plus, if there are any changes happened during current year into that logic of ERP system for the purpose of computation of depreciation. So that is something that we as an auditor need to examine for the purpose of depreciation. Whether the asset capitalization is proper or not, because that would also plays very important. A lot of times company tend to capitalize towards the year end so as to get the income tax benefit, so as to get a lot of other their budget, so as to meet their budgets and targets. So that is something which is can be identified as a risk depending upon the type of organization, and we need to identify that the controls are properly placed in by the management or not. Next is on useful life. So again, in useful life is a quite significant estimate used for the purpose of computation of depreciation, whether the useful life determined by the management is appropriate or not, or even not only for PP but also for right to use, the depreciation computation is proper or not. So again, once we determine or understand the process, identify the risk, identify relevant controls, we'll be able to determine what would be the proper strategy to verify depreciation as an expense, whether we want to rely on automated control, do some level of manual, or is there any manual intervention in the computation of depreciation, and design our audit procedure and conclude so as to keep our risk of material misstatement at low level. So again, some of the aspects while we determine what for depreciation and amortization starts with understanding the accounting policy, whether they follow Indian GAAP or an old accounting standard. So that also kind of plays very important role. What is useful life disclosed in the financial statement, whether the management has performed technical evaluation, if the useful life used a bit different than what is the industry standards, then whether the management has performed technical evaluation, whether internally or externally. And once we kind of do that, we need to also make sure that we'll document that properly on our audit file on the technical evaluation part. Whether the residual value has been factored while computing depreciation or not. And again, it is correlated with the accounting policy followed by the company, whether they have followed component accounting while computing depreciation or not. And expense of revenue, whether the type of nature of expenses, whether revenue expenses are capitalized or capital expenses charged to revenue, that is something required to be understood while testing of depreciation. Whether the physical verification of property, plant, and equipment carried out or not, because that also plays very important role. Some assets may not be in use or may not be physically available, so that would again will have an impact on depreciation or amortization as an FSLI. Last but not the least is reliance on the system, as we discussed, and right of use asset. So whether the computation is made properly as per the requirement of Ind AS 116 for the leased assets. So again, on to conclude on the depreciation part, we will verify, we have to verify kind of asset capitalization form, invoices, depreciation working, fixed asset register, etc. So those will kind of help us in giving sufficient appropriate comfort on our audit procedures. In the form of substantive analytical process, we can check whether the reasonableness of the depreciation is proper or not, whether those are in line with last year, whether there are any significant additions made during current year, then there has to be a change in the depreciation number as well. So that kind of variation analysis that we can perform and take the conclusion on whether any misstatement exists in depreciation and amortization as an FSLI. Yes, so let's move on to the next part. now we'll come to other expenses. So again, other expenses are broadly categorized into various heads. So we'll just quickly look through an operating expenses or other expenses, so as to say. I'm not going in detail for again an understanding or identifying risk. It's more or less same thought process that we have discussed for purchases, employee benefits, or even depreciation. So again, identify the risk of what can go wrong, identify the controls which can mitigate those risks, and determine what could be the audit strategy. Yeah. So what I have narrated is there are certain expenses that we can kind of plan our audit procedure in an appropriate manner, which starts with, for example, rent expenses, which is quite simple, where the company will have a rent agreement with a particular party. So we need to say month-on-month analysis of rent expenses for the month of April to March, whether those tied up with the rent agreement schedule or not. Also, in those cases, we need to assess whether if Ind AS 116 is applicable under Ind AS framework, whether those agreements fall under the purview of Ind AS 116, and company needs to recognize right of use assessed in those scenarios. Also, we need to verify for, let's say, for rent expenses, we can easily look our rent expense as a schedule and see whether 12 entries are there into those rent expenses general ledger or not. And if it is not there, then there might be an issue on completeness, whether only 11 journal entries are noted and 12th one may or may not have been recorded by the management, whether the accounting policy for rent expenses, whether the straight lining happening or not, any escalation required or not. Those are kind of typical stuff that we need to examine while we validate the rent as an expenses. Similar case happened for power and fuel, 12 months, 12 invoices in a normal course of business. We can go and verify or validate from in just a spreadsheet perspective, just identify whether the 12 entries are posted in general ledger or not. And if there are any missing transaction, there would be a question on completeness of the transaction. Again, analyzing the trend of consumption. So let's say, for an example, a particular month fuel consumption just picked up, whether the consumption records also shows the increase in consumption in that particular month or not. So that is something which we can link, for example, power and fuel as an FSLI with the consumption of material as an FSLI. Next is on insurance expenses. So whether the summary prepared, or we can just glance through summary of insurance expenses and check whether the computation of prepaid expenses for an insurance policy is proper or not, whether all insurance policies are covered in the schedule of insurance expenses. On repair and maintenance, the major task is whether the expenditure is a capital nature, which is charged to P&L, or vice versa, whether the revenue expenditure taken to the property, plant, and equipment. That is something which is a risk in a lot of organizations. We as an auditor need to perform sufficient procedure to identify the asset meet proper recognition criteria. Then only it is required to be capitalized into the books. Next is a kind of good example on legal professional expenses. So we'll also later on some slides we'll have one case study as well on legal and professional expenses. So as an auditor, the standard 501 specifically provide analysis of legal professional expenses, not just to see what are the payments made to various legal professionals, but that would kind of give us a link to whether there are any indicators for any contingent claims or indicators of any provisions required to be made. Do we need to send a confirmation to those lawyers to understand if there are any serious litigations which are required to be provided into the books? So scrutiny of legal expenses, legal professional expenses plays very important role, and we need to correlate that with legal or other expenditure incurred or lawyers appointed by the company into an organization. Auditors remuneration required to be disclosed separately, whether that from a disclosure perspective that is properly disclosed or not. From a miscellaneous perspective, this is a residual head. A lot of time you will feel that a lot of things clubbed directly under miscellaneous expenditure, like penalty, fine, late fees. We need to identify whether the separate disclosures required for those type of transaction or not. Let's say in case of a penalty or fine, whether you need to kind of taken care while doing a tax computation while you make the audit of taxes. So that correlation also required to be made while we'll examine the miscellaneous expenditure as a line item. Next is on corporate social responsibility. So this is something which is a new disclosure came up under Schedule 3, which is applicable from this March 2022 financial year onwards. So which required kind of, as an auditor also we need to examine whether the disclosure made by the management is proper or not. So a lot of companies, whether the way as an auditor need to say whether the companies are covered under section 135 of the Companies Act, and just see whether the disclosures required under Schedule 3 is properly disclosed or not. Again, a lot of CSR rule got amended last year. So for March 22 financial statement, while we audit those financial statement, we need to see whether the computation of CSR or the computation of CSR liability is properly computed by the management as per the requirement of section 135 of the Companies Act. Whether the projects that were identified, whether those are ongoing project or a not ongoing project, that classification also plays very important role. We as an auditor can correlate that with the CSR committee or the resolution that CSR committee has passed, or so as to say cross check with the CSR initiatives that are taken by the company, cross check those with the corporate governance report that the management prepares. So something CSR plays very important role. Change happen in the current year, so make sure that you perform sufficient appropriate audit procedure on CSR as an expenditure. Yes, so I will capture some of the additional aspects of the finance cost and some of the other expenditure categorically. Um, from a finance cost perspective, major breakup is an interest expenses, other borrowing cost, or an interest payable to any other parties. What could go wrong is that the allocation of expenditure between various FSI is not proper. Like for example, something which is required to be capitalized, which is charged to the statement of profit and loss, or vice versa, that is considered as a significant risk or identified as a risk. Maybe sometimes it may happen that the company is disputing with the bankers for charges levied by the bank. So in those cases, they have not recorded that into the statement of profit and loss. So that is again raises a question on completeness or transaction not recorded in the proper period. Also, finance cost is not accurately accounted. That is something which is identified as a risk. From a controls perspective, whether the controls placed in by the management, some examples are the sub ledger is reconciled with the general ledger, whether the manual review happening properly on the interest expenses and FSLI. So again, once we'll kind of do an understanding of the business process of finance cost, identify proper risk, identify relevant controls, we can determine what could be the audit strategy and perform the controls or substantive testing over that audit strategy. Some of the key considerations specifically applicable for the finance cost, again, look into the accounting policy for capitalization, for borrowing cost, whether the bank statements were verified by us or cross-check for an interest expenses, specifically advice received from the bank required to be examined or required to be verified, whether the interest rate charged by the bank, whether those are in line with the what is sanctioned in the sanction letter. Last but not the least is whether the company has taken any foreign currency borrowings, and in those cases whether the disclosure is made properly for applicable net loss or gain on foreign currency transaction translation in line with the requirement of Ind AS 23 or AS 16 of borrowing cost. So this is something which is specifically applicable for the finance cost, which we need to examine. Apart from that, from a documents perspective, whether we have verified bank advices, sanction letters, borrowing cost computations, again in interest on MSME party, that is something also very critical because of this is a specific act which is applicable for an MSME. So whether the interest is properly provided for MSME parties for any delayed payment or not. Is the interest paid on taxes or not? So that is something which is also covered under finance cost as an FSLI. Taxes. So this is something which is quite interesting in terms of doing and proper assessment of taxes plays very important role. Uh, Overall audit approach for taxes is kind of, we need to involve tax specialist if that the tax computation are quite complex. In a normal business where taxes are not complex, we would have those capabilities to verify taxes. uh, Wherever we involve tech specialist or an experts, we need to determine what could be the roles and responsibilities, so as to say who will do what. Apart from income tax, we need to determine the deferred tax. So we'll just look into next slide on the steps followed for the deferred tax computation. We also need to identify what are the common e-tax issues that the company is facing. So in last few years, particular tax item which is disallowed by tax authorities, and current year also same claim is made, whether the for the purpose of tax computation, whether we need to consider that while verifying the tax provisioning for the particular period or not. And also we need to interpret significant findings which tax specialist has given it to us. So that is something that we need to examine while auditing taxes, and provide appropriate responses against each of those queries raised. This is again a 9-step approach for computation of deferred tax, like calculate the current tax, determine tax base, then calculate temporary differences, if there are any exceptions and identify those, review deductible tax differences, determine the tax rates. That is also play very important role for the purpose of computation of deferred tax, where the company has used the tax which is applicable for the purpose of computation of deferred tax, then recognition of the deferred tax, what are the line items on which deferred tax is applicable, again a presentation and offsetting and disclosure of the current tax as well as deferred tax. There are some general considerations while we verify expenses. So as to say whether the disclosures required under schedule 3 as per applicable reporting framework is carried out by or not while validating expenses, whether the withholding tax has been properly deducted and deposited well on time for expenditure item on which the withholding tax is applicable. Are there any unusual journal entries which are posted at the flag end of the year? That is something which is we need to specifically scrutinize, so as to say that whether there are any overstatement of expenditure or not. Also need to scrutinize the general ledger of other expenses to identify any unusual item which may not be in a normal course of business. Also whether we have checked the grouping of particular expenses on, or something which is required to be grouped under the rent as an expense should not be grouped as a repairs of expenses. Also, have we performed testing of unrecorded liabilities subsequent to the year end? So something which management has paid, let's say subsequent to the year end, they have make the huge payment in the month of April, whether those are related for the period of March or required to be recorded for the period of March or not. That is something which we need to examine while we kind of design our overall approach for the audit of expenses. Have we performed assessment of contingent liabilities versus actual liabilities while we have determined the testing approach? And are the disclosures, are the accounting is consistent in line with accounting policies for the current year as well as for the previous year? That is something required to be examined. Whether the prior period expenses are booked in the current period, that is something we need to examine. And are there any exceptional items which needs to be disclosed separately or not? So these are couple of few general considerations which are required to be carried out on an overall basis while validating expenditure as a line item. So in a nutshell, we need to kind of identify assertions or explicit management assertions, and we need to say that whether we as an auditor are we comfortable with the management assertion or not. We need to draw our audit program so as to provide sufficient appropriate audit evidences on those assertions made by the management, and conclude whether there are any misstatement exist into financial statements or not, and if misstatement exist, whether those are corrected or not corrected. In case those are not corrected, whether any effect required to be taken in the auditor's opinion or not. Also, there are also these procedures what we have discussed are recommendatory and not an exhaustive procedures. It depends on the company to company. We as an auditor needs to use our professional judgment while planning our audit procedures. So last few sections wherein I will be capturing some of the key aspects. These are typically not the audit procedure per se for an expenses, but how efficiently we can perform audit of expenses by linking those with other FSLIs. So again, in next 2-3 slides, what we would be discussing is interplay between the items which is there in the statement of profit and loss vis-a-vis what are the items which is there in the balance sheet as a transaction. So as we understand, all the items which goes to the profit and loss second leg, 99.9% would be there in the balance sheet, whether it's an asset, liability, or an equity as a transaction, so as to match the principle of double accounting. Um, in those cases where we want to link items of statement of profit and loss with the items of balance sheet as a transaction, we can perform through a combination of various procedures. uh, First one would be the risk assessment. At the planning stage, we need to identify what are the key FSLIs or key expenses, what are the usual unusual transaction happened during the current year, and identify what could go wrong in particular expenses. Next is on the procedure on which we apply on related balance sheet account. Let's say, for example, accounts receivable, we have planned some confirmation procedures. We would have designed some of the subsequent realization of accounts receivable. So that is something plays very important role where we wanted to link items which is there in the profit and loss account with items which is there under the balance sheet. Also testing the proper presentation and disclosure of expenses, maybe through dual purpose testing, plays very important role. And last but not the least is overall conclusion analytics that we perform at the completion stage of our audit. So it starts with the planning and risk assessment and ends with the overall conclusion analytics. So these are the procedures. If we are able to perform, we can rely on some of the expenditure line items which is there in the statement of profit and loss by performing some of the procedures at a balance sheet level. So ultimately, in those scenarios, we need to identify what could go wrong with that FSLI. Let's say, for an example, rent expenses, what could go wrong? Whether our risk assessment says that there would be an issue of completeness, or our risk assessment says that we don't find any issue so far on rent expenses, and we can perform testing maybe at a prepaid expenses level and conclude whether the rent as an expenditure FSLI is proper or not. So this is an illustrative chart on linking on inventory as an FSLI with cost of sales. So when you just see the output in the form of closing inventory comprises of some sort of opening balance of the inventory. Then we'll have a purchases in the form of raw material, in the form of variations between standard price from the standard cost, and then which is credited to the accounts payable. We also have some of the overheads which are required to be loaded on the inventory based on the standard bill of material. There are some sort of payroll costs which are getting loaded on the inventory, and there are some other direct costs which are kind of loaded on the inventory or over the consumptions in the inventory computations. So in those cases, when we'll have a comfort on opening balance of inventory, closing balance of inventory, and purchase or or purchase or overhead as a transaction, we can simply go and rely on the number which is coming as a cost of sales, which is a residual of opening, closing inventory, as well as purchase of any transaction and overhead. So this is a kind of very interactive play between inventory as an FSLI as well as cost of sales as an FSLI. Next, what we are looking is an operating expenses as an FSLI. So operating expenses captures a lot of items or other, so as to say other expenses. Some expenses, like say for amortization and depreciation, we would have kind of performed substantive analytics, so as to say what are the movement or changes in the current year as compared to previous year, and rely on through that. Payroll expenses also can be tested by way of a substantive analytical procedures. There are some exceptional items, like if there are any restructuring happen, we kind of need to determine those specific FSLI and perform specific testing on those. And after that, what is the balances derived for like leases, R&D expenses, legal professional expenses, etc., and need to determine how we have get the comfort on operating expenses and FSLI, whether it's by way of an verification of samples or by way of an other FSLI like prepaid expenses or like accounts receivables or any other line items, and perform or determine what could be the remaining item where we need to do a additional or specific testing. Next is on auditing estimates. So herein I have tried to capture some of the aspects. So I'm not going in that much detail because this is as good as a detailed topic of auditing estimates. There are some areas where the estimates are involved. This is as good as not only impacting on balance sheet as an FSLI, but also expenses as an FSLI. This is a typically chart drawn from an Ind-AS perspective. However, it is as good as applicable for IGAAP financial as well, some of the line items. So it typically starts from recoverable amount of property, plant, and equipment, wherein there are some estimates involved in terms of computation, and residual again goes to maybe a depreciation, amortization, or impairment in the statement of profit and loss. Another is on kind of present value of defined benefit obligation. So as we have seen under the payroll FSLI, actual valuation plays very important role. So that is also considered as an estimates involved while we compute the Ind-AS or look into from an audit perspective what are the judgments involved. Useful life of property, plant, and equipment, that is also key estimates involved in terms of computation of depreciation, also impacting the depreciation or amortization. Provision of old inventory. A lot of organizations will have old age inventory and they will have a policy for making provisions for old inventories. So that is something which is also considered as an estimate and which will have an impact on the statement of profit and loss. Loss allowances, so expected credit loss, which is a terminology used under Ind-AS for accounts receivables or any other financial assets. So that is something that is again an estimate. Recoverability of the carrying value of deferred tax assets. So if the entity has recognized deferred tax asset, what could be the probability of recovery? That is also considered as a key estimates involved. A lot of time Ind-AS 115 revenue recognition, there are estimates involved in terms of the transaction price, allocation of the transaction price. So we need to determine whether the estimates involved in that particular FSLI or not. Many organizations will have an investments in subsidiaries, associates, joint venture in the form of equity, in the form of loan. So we as an auditor need to perform whether any loss allowance required to be made on ECL, expected credit loss, as per Ind-AS 36 or Ind-AS 109. Estimates also involved in contingent liability. So let's say a company has received a big order from an income tax authorities, whether the provision required to be made or not. That is also considered as an estimate, which we need to examine as an auditor and conclude whether the provisions required to be made or the amount of disclosure in the contingent liabilities appropriate or not. Lease liabilities and right of use asset, that is also to some extent there are estimates involved in terms of computation of the rate at which the right of use assets are getting booked. and present value of accounts payable. So sometimes the company has a large account payable which are not to be paid within 1 year, and the company has a right to repay it after 3 years, 5 years down the line. So in cases discounting is also carried out, and that also involves account estimates and judgments. So estimates are typically categorized into three broad categories, which is kind of one side. For some estimates like provision for inventory, we will have an evidence till we sign the audit report. So some of the estimates, let's say the company has made the provision on 31st of March, and for the slow moving inventory, and if we'll see that in the month of April or May, before we have signed the accounts, that inventory is already sold off. So that is something considered as an estimate as a 31st March. However, that will have an impact when we sign off the account. So that estimate required to be reversed if that is the case, or if we can examine those by way of some additional procedure till we sign off our audit report. Second way of procedure is the testing on how the management is making the estimate. So in those cases, we will understand the overall management approach on identifying risk, or identifying the risk, to identifying overall evaluation on particular estimates, how management is making, whether we as an auditor can rely on that as estimates made by the management. Maybe sometimes they will make the provision of doubtful receivables in the form of expected credit losses. So whether we can rely on management estimates or not. And third procedure is developing our own auditor's point or range estimate. So in those cases, we'll determine as per us as an auditor what could be the provision, what could be the expected credit loss in particular FSLI. This is a typical 10-step approach for auditing estimates, which starts from performing risk assessment, wherein we'll go and verify whether management has performed or identify estimate properly or not. And let's say for when we reach to 8th step, and we'll conclude that we can't rely on how management has computed, then we need to determine our own estimate what could be from our audit procedures perspective. And in those cases, whether we need to see whether we want to rely on specialists or experts that are required to be involved for any particular estimates or transaction. These are typical potential accounting estimates. I have just noted down in terms of an amount, whether those are considered as an estimates or not. So typically recoverable amount, if it is not material, that is not considered as a significant estimate. Net realizable value of inventory. So if that is a significant, then it is considered as an estimate, and we need to design proper audit procedures for that. Useful life of property, plant and equipment, technically it is not an estimate, but property, plant and equipment recoverable amount, that is typically an estimate, because that will have an implication on depreciation. Again, a trade receivable, if there are expected credit loss provision required, and if it is a material amount, then yes, it is considered as a significant estimate. If there are prepayments, which is a smaller amount and which will not have any significant impact and the computations are also not complex, so that is also not considered as an key estimates. And provision for warranty. So a lot of time there are a lot of assumptions involved while the entity makes the provisions for warranties and expenses. So that is also something which we as an auditor need to examine whether that is considered as a significant estimate or not. So here we come to the second last session, which is an other considerations. Again, starting a strong is good, but finishing strong is epic. So that's what I would like to say. And similarly, it is applicable for our audit process. So when we plan our audit in terms of an understanding if we are good, we also need to make sure that when we complete our audit, provide our audit opinion, we'll finish it well. So there are some broader key considerations which are required to be made, which will have an impact or may have an impact on a particular expenses. I'll quickly pick up some of the items like fraud or going concern. So we need to make sure that whether we have applied professional skepticism properly while we have designed our audit approach, in terms of an expenses? Have we asked relevant questions to the management? Have we verified third-party evidences? Understand the entire process that is placed by the management, or have we challenged the management at relevant stage? For some of the cases, have we remained aware of what are the particular changes into client, how they operate in a coronavirus situation or a geopolitical situation which arises in Russia and now in Sri Lanka? So if let's say for an example, client has some transactions with those territories, are there any sanctions which are applicable? Are there any recoverable that company has from the entities which are operated from Sri Lanka or Russia? We need to make sure what could be the impact on our audit, what could be the impact on the expenditure which are getting booked on an overall basis. So again, whether those are, we need to link with the fraud transactions. So again, a fraud triangle, which is incentive, pressure, or opportunities, which ultimately goes to a fraud. Are there any change happen in those framework which we have determined at the beginning of the audit and what we conclude at the completion of our audit? Are there any indicators noted for going concern or not, whether that would have an impact on our overall audit procedures? Have we identified any new risk factors on on involve and that require involvement of the specialist? Have we identified any new risk factors, whether the forensics required to be involved in some of the cases if there are any fraud indicators or fraud risk is heightened in some of the scenarios? Another is, which is very prominent globally and also in India to some extent, climate change. Recently, government has banned single-use plastic from 1st July, right? So we need to understand whether this would have an impact on my audit, my business in which my client operates, and correlate the climate change impact on our clients, on our on the business houses that we are working with, and are we comfortable with the disclosures that management has made into the financial statement? A lot of companies has now moved towards the ESG, environment social governance, as a framework, and put up a lot of commitment. Let's say they want to be net zero by so and so year. So have they done disclosures? That is one thing, if they would have done in their annual reports. Having said that, whether that would have any impact on our audit procedures or not. Let's say for an example, entity has put up some commitment, they want to be net zero by 2030. What could be the impact on March 22-23 financial statement? Are there any revamp required to be made? Or if we have made some impairment assessment, are there any changes required to be made or not? That would have an overall impact of the climate from an audit perspective. Uh, Also, cryptocurrency new disclosure required to be made. So need to make sure that if the client is entering into those type of transaction, whether it would require proper disclosures as per the requirement of the Schedule 3. Cybersecurity risks. So a lot of companies are enforcing cybersecurity as a risk. Whether we as an auditor have performed proper risk assessment on the cybersecurity risks which are applicable to the entity, and whether the management has put a proper control mechanism to mitigate the cybersecurity as a risk. So as to say, at the planning, are we comfortable at the completion stage itself? At the time we sign off the report, are we comfortable with whatever process performed throughout the audit? And based on that, we need to draft our audit opinion, wherein identify or issue an error-free audit opinion. So there are some case studies which I think maybe will not have much time to take up. Maybe we can kind of discuss if there are any Q&A which will have or any questions that you may have arise during this session of audit of expenses. Back to Anilji, any question that the participant has, if you have received, maybe we can discuss those questions and then we can conclude on the session.
Thank you, sir. Thank you so much for wonderful deliberation. Can you
Yes,
hear me,
thank you.
sir?
Yes, I can hear you.
Thank you so much. Thank you so much for your wonderful deliberation, sir. What are the key areas in which auditor should look at the connection to discover the personal expenses debited in the books of accounts?
Yes. According to the my view, while we examine a lot of expenditure, we need to identify what are the likely source of misstatement, or what are the sorry. Sorry.
Yes, sir. Some confusion, sir. It's okay.
Okay. When we do go and perform our audit, we need to identify what are the line items which are considered as unusual. Let's say, for example, traveling is an expenditure which can be considered as unusual if there are personal travel also getting booked into the books of a travel expenses. So that is something which we need to identify from our risk assessment perspective, that what could go wrong, and do a proper testing for that particular FSLI, and identify if there are any personal expenses which got debited. Then there are a lot of repercussion even under the Companies Act. So we need to take care of what could be the probable non-compliance with specific laws and regulations.
Yes, sir. Yes, sir. While taking into the audit part, so what considerations are to be taken care by the auditor that all the expenses are booked or all the expenses are shown as per the law or as per the income tax or as per the other provisions, and the auditor need to check these also. So, what are your views and what are your opinion as a gist for the auditor to check the while checking the expenses in the profit and loss account?
Yes. Again, we as an auditor needs to perform or provide an opinion on reasonableness of the financial statement and whether these are true and fair. So we need to design our audit procedure in such a manner that if there are any indicators of fraud or chances of error, we need to design proper audit approach or design appropriate audit procedures around the same, so as to say that, let's say, for a completeness of a transaction, one example I have given for a rent expenses. So if we'll identify 12 transaction in a month, and in ideally that is the expectation, that rent expenditure should be booked once in a month. And if we'll identify in that journal ledger, while we do a scrutiny, we'll identify only 11 transactions, right? So that is one leg which is not getting booked. By performing a logical appropriate audit procedure, we'll be able to identify if there are some transactions which are getting missed out of those, and understand whether are there any additional procedures required to be performed to identify any of those transactions if we have found some of areas this type of transactions.
Yes. And how to analyze the foreign exchange loss or gain?
Okay, so foreign exchange gain or loss typically bifurcated into 3 or 4 parts, which is unrealized gain or loss, 2 parts, and realized gain or loss, another 2 parts, wherein we need to verify the unrealized gain or loss. Typically, we can link that with other FSLI like receivables. If there are receivables in foreign currency, whether the restatement happened for that particular receivable at the closing rate and the respective residual amount taken to the exchange gain or loss into the statement of profit and loss or not. Plus, while examining the outstanding receivables in the foreign currency, we can correlate again that with the various disclosures like unhedged foreign currency balances which are required to be disclosed in notes, whether the number is matching for those receivables or not. Similar procedure we can perform for trade payable as well, or even foreign currency loans, and conclude whether the unrealized part is proper or not. So far as realized gain or loss is concerned, we need to identify what are the line items which are creating those realized gain or loss. Maybe for an example, company is doing an export or an import of material. In that P&L item, there may be possibility of realization or unrealization of losses. We need to see what is the transaction date vis-a-vis what is the payment date. So if that are kind of occurred based on our sampling will identify that what is the transaction date vis-a-vis the payment date. The residual would be a realized or unrealized gain or loss.
Yes,
So on an overall basis, these are the procedures that we can perform for realized and unrealized.
Yes, sir. But sir, what are the views with regards for the unbilled revenue? How can we find audit evidence in that particular thing? Which is
Sorry,
totally
can you?
unbilled. So how to find the audit evidence in case of the unbilled amount?
So from an unbilled revenue perspective, this is something which is linked with the revenue as an FSLI. Having said that, we as an auditor need to have a proper understanding of the contracts that is entered into by the company. So whether based on the agreements or a key contract entered into by the company, there are some transactions which lead to revenue recognition or lead to an revenue based on the percentage of completion method, whether company has used proper accounting for that particular revenue stream based on the requirement of Ind AS 115 or under old IGAP. So that is something which we need to examine, and based on that we would be able to conclude on whether if there are any unbilled revenue which is there or not.
So one related question is there, sir. Is an auditor, what is the procedure to check the related party transactions? Whether
Yes.
we will cover this part in our next VCM, but question member has raised a question in today's VCM. So if you can kind of elaborate relating to the related party.
Okay. So again, related party itself is a big topic. So as well as to just to give you a
We are going to
glimpse.
organize for the next VCM.
Yes. So just to give you a glimpse on identification of the party, that is first and foremost part, whether the management has identified all related parties properly or not. And even during course of our audit procedure, if whether a transaction entered with those parties, are they properly classified as a related party transaction, whether the relevant approval from the board or relevant approval from the shareholders have been taken in specific cases or not. That is something that we as an auditor need to examine, and a lot of responsibilities in terms of related party transaction. Um, be it part of our main audit report or even CARO as well. A lot of onus on us as an auditor as well, whether we need to we have seen proper compliances from a related party transactions perspective.
And sir, what are the considerations to be taken into account to test whether if any movable asset used for the personal purpose or not?
Yeah, so one procedure that we can perform is physical verification, which normally management will also perform, and we as an auditor also can go and perform physical verification of asset, so as to say that whether those are used for the purpose of business or not, or even identify those assets within the office premises or those are not identified. That is something that additional audit procedure that we can perform if we kind of consider that as a risk from an overall audit perspective.
So last question, one member is asking, can you give us a gist or your expert opinion relating to the auditing the miscellaneous expenditure? While checking the miscellaneous expenditure, what precautions are to be taken into account and what we need to check while checking the miscellaneous expenditure? Because generally what we do, we put a certain amount in the miscellaneous expenditure.
Yes. So a lot of time what entities or what the client does is they'll consider this as a residual account. If they don't identify any specific head, they'll park it to miscellaneous. What we as an auditor needs to go and check is that, let's say for an example, are there any unusual entries? Are there any unusual narrations which are there when we kind of pull out the dump of miscellaneous expenditure? Maybe do some kind of filtering in the spreadsheet itself, right from the high value transaction, and identify, let's say, top 5 top 10 transaction whether those are properly classified into miscellaneous expenses or required to be taken into respective heads, like maybe a repair expenses which are booked as a miscellaneous if they don't want to show as a big repair. That kind of one of the consideration that we can have a look while we kind of do a scrutiny of the miscellaneous expenditure. Another thing which we can correlate is that the withholding taxes. So whether the withholding tax is applied for specific miscellaneous expenditure, which are kind of, let's say for an example, payment to one consultant, whether the TDS has been properly carried out for that particular transaction or not. That is something which we should evaluate while we kind of scrutinize miscellaneous expenditure as a particular line item.
Thank you so much, sir. Now we come to an end. You have justified your presentation. You have covered almost all the expenses in a different parts and explained in a very lucid manner, in a very explanative manner. On behalf of AASB of ICI, I extend my heartiest thanks towards you for sparing your valuable time and enlightening all of us on various implications as well as the audit considerations while auditing the expense part of the profit and loss account. And really appreciable. You have justified with your presentation with the way you have explained. Really, very thank you, sir. Thank you so much, sir. Thank you so much.
Thank you, everyone. Thank you, all the members. Thank you.
Thank you. Thank you so much. Thank you.